Hey, what's going on, guys? This is Terrence Ray with another stock market update. Right now, we got a relatively flat market. We have the VIX is at what 1933. It's down about 42 cent. We got the S&P futures relatively flat right now. They made a move lower as the market opened up, but now they're back in the green, just up maybe two handles. And trying to get this microphone straight. Let's see, the Nasdaq futures are down about 19 handles. We got the Dow futures down about 50 handles. And I'm just reading right over here to the left on my watch list, and we got the Russell futures up about four handles. The bonds are up. So if right now we just basically got a flat market. What I do see, what I'm noticing right now, I see oil is making a move. Oil is up almost a whole percent, and also we do have gold up as well. So we can watch those two right there. We got the oil and gold futures moving. The financials are green, XLF, and the XLE is basically flat, but it is green. So if I had to make a call right now, we're probably gonna get some range bound action, right? We may get a little sell off or a little pop at the end of the day, but basically tomorrow is FOMC day, so we get the Fed. The Fed is gonna make a decision on interest rates tomorrow. And you guys know how I feel about that. If you've been with the show, I just go to the CME website and then look up, and you got percentages there. So stop trying to let people say this, scare you on interest rates and what they're gonna do. You have probabilities on the website. You can go look up, and it'll tell you what the probability is that they're going to do a interest rate hike. And right now, the probabilities are, I think, like 90%, in excess of 90. Last I seen, it was like 98% that they're gonna do nothing. Right? It could have changed a little bit, but if you watch the bond market will tell you what they're gonna do. Bond market uh, is is holding flat, so they'll probably do nothing. The bond market continues to sell off, they'll probably raise. Right? They'll probably raise interest rates. Bond market starts to go up, then they'll either stay flat or sell them. I mean, or excuse me, or cut. And I don't see them cutting interest rates right now unless some funny stuff goes on politically. Right now, maybe I'll talk about that in another video. But the main gist of this video right here is to talk about buying power effectiveness. Right? I want to talk about making use of your buying power, or making use of your capital. And this pretty much stems from a uh, um I'm in a Facebook group, a stock trading group, or group, stock market traders. And so one of the guys in the group, I think it's a guy, I can't tell by the picture, I think it's a guy, and he says, do you guys think now is the best time to buy some Tesla shares? Thank you. And so he puts a chart up of Tesla. So let's go look at Tesla, just so we can, even though the chart to me in this particular instance isn't that big of a deal, but I want to pull up the chart, and I don't know what platform he's using. I'm not familiar with this platform. Um, I don't know. You guys got to get start using some real trading platforms. I don't know what part of the country he's in. So this is Tesla. Let's back it out. Let's go, because he's showing the high of 210 at this. So he got to be looking at like a, let's just go back a year. He may have a weekly chart on, but either way, the chart doesn't. It really doesn't matter. He has $197 where it was trading at when he posted it, and so now it's at 199. So it was yesterday. All right, and so what I said, people had, different comments. And everyone always trying to catch a falling knife. And then somebody said at the bottom of the range. And that to me, that's relative. Like at the bottom of what range? So if we looking at this chart right here, this ain't the bottom of the what range? If I'm looking at the chart, this is a yearly. So if I'm going from low to high, we probably in the middle of this range. If this is the high, and this is relative, what is that? We'll call it 300. Look like it's right around 299. Well, let's call it 300. And then it's low. Let's call it 100. And we're at 199. We're in the middle of the range according to this chart. Now, let's go. Let's put a weekly up. Let's look at a weekly chart and let's look at a 5-year weekly. And then I'm sure it's going to look different. It may or may not. As soon as all right. So here we go looking at it still looks like it's the same thing if we looking like right down here and then here, and we right here. We still look like we're in the middle. But my point is relative to be saying like what that person said is at the bottom of the range. But anyway, here I come in and I say, no one knows when it'll stop falling, but you can sell out of the money puts around the 15 delta at $160 and take in $3.20 in credit. To me, that's the better way to play it. So what I'm saying is you can sell an out of the money put. Basically, that's what and around the 15 delta. And I said take in about 100 take at the 15 delta. Let's go to the option chain just so I can show you so I can show you what I was saying. I was saying right here, right? And now that 15 delta is now actually a 13 delta. And at the time when I said it, it was 320 in credit. Now you can see it's already down to like 294. So it's just between yesterday and now, it picked up like you made about, I don't know, $23, $30 or whatever, right? So I said sell the 15 delta at the 160 strike. It was right here. And I said take in 320 in credit. I said that's a better way to play it. So another person comes in and says, but then you're obligated to buy lower unless you buy back the option. So you're tying up your cash to maybe collect a 2% premium and risking having to buy way below your comfort zone. So I'm I'm in my opinion, I don't have a whole lot of risk out here. I'm outside of one standard deviation. I'm not that here's the expected move right here. The platform is showing you what's the expected move. So anything outside of this is unexpected. And they're using math to calculate this. Selling this put gives you an 80%, 86% probability of profit, right? So basically, selling this put 100 times, you win in 86 times. Basically, you got 86% probability of profit. Right. That doesn't mean that it can't, because it can come down there. It's not 100%. However, if I manage early, I got a 91 is moving around percent chance of keeping half. Now look, my buying power, because he said you're tying up, he says you're risking having to buy way low below your comfort zone. He's basically talking about you're tying up cash. You're tying up $6,400. Now, this person that asked about the stock is because he's looking at buying the stock. So to sell this put, you only tie up $6,400. If you buy 100 shares of Tesla, you're gonna tie up 20 grand. Because the person is asking like when should they buy? So why would you buy here? You mean to tell me you'd rather buy here at, let's just call it 200, 200, rather than sell a put right here at 160? Because if you put the shares here at 160, you get in at $16,000 as opposed to tying up 20 grand. They'll probably margin you half of that amount, but just to make you're selling a put is still the cheaper play. And when you sell puts, it's more um if the market does nothing, you make money just the market going sideways. You don't make money in Tesla unless it goes up. The stock does not pay a dividend. So you just holding it until it goes up. You don't make any money. You make money on selling puts if it does nothing. And it still will have to have an outside move to the bottom to tag you. And you're outside your 45 days. The chances of you getting put stock at 45 days are very slim. I've never been assigned. I've never been assigned stock. I know what I'm talking about. I've never been assigned because I'm not holding selling puts in here. I'm not holding puts until they get here. If I sell here, I'm out of the stock. I'm out of the closing the put that I sold right around the 21-day mark. You don't hold them until expiration. That's an amateur move. And so, these are some of the things, man, hit that like button and subscribe button watching this video. I promise you that the information, a lot of this, you can find it on places for free, but most people either they don't know it or they charging you an arm and a leg to teach it to you. And you darn sure not going to get it watching TV. Because for them, it's either buying the stock, they want you to buy it and hold it forever. And another thing, get out of, don't fall in love with a stock. All these are just letters to me. Well, letters, AAPL. Yeah, we know it stands for Apple, but I don't care. META, all this. I don't care about any of these companies personally, right? It's just letters. It's just ticker symbols. And if I see a nice setup that I like, then I trade it. That's it. So look at it that way. Um, This is, in my opinion, even if I wanted to, let's just say I wanted to buy Tesla right here. Let's say this is my price for the sake of let's say 197 is my price and I want to own Tesla right here. I still wouldn't buy 100 shares right here. And this is my price. You say, well, what would you do? I sell it in the money put. If you sell this put right here and take in 1,500 bucks at 200, and let's say Tesla runs up. You say, man, I missed it. I don't own the shares. You still got $1,500, right? It goes up. You can close it out. Um, you can close out the put once it goes up and take the $700 or $800 or whatever, take 50% of it, and then roll your put up and keep rolling put up until you get hit. That's if you want to purchase the stock. I still wouldn't buy it right out. I sell a put. And then if it goes down and you get hit, instead of owning it at $200, it'd be $200 minus the 15. So you're gonna get, instead of, you see how it says you're buying, basically you'd be owning it at 180, 184, or we'll call it 185, basically, because you collected this much premium. So that's how much it will come off of the total price of what, instead of being 20,000, it'll be, you take off the 1,500. And so those are just little nuances to making use of your buying power and using options instead of just buying shit. Now, if I wanted to, and then even if I did buy shares, let's say you bought 100 shares right here at 200, sell a call, do a cover call. Buying 100 shares, you basically is 50-50. You increase your probability of profit just by selling the call. Come right here and sell the 31 call. So you buy it at 200, sell the call at 220. Well, man, I'm capping my profit. Yes, you are. But it's almost like a way of giving yourself a dividend without, so buying it, because you only make money if Tesla goes up, right? It pays no dividend. But if you buy it and then sell a call, you can sell it out of the money call on Tesla. It's just the premium is juicy. Come out here and sell it. Let's just say you sold, even though I wouldn't sell a 16 Delta on a cover call, I would stay between 30 and 40 Delta. But let's just say because you're concerned about capping your profit, right? You sell this call out here. Every time $50 comes out of this call, I close it out and do it again. That's like paying yourself a little $50 dividend. And you can continuously do this and continuously do this and continuously do this and continuously do this. And $50 will come out like that. You already seen that this was trading. Now it's bounced around, but this right here, this put was at 2 when I started this video. It was right around 292, 293, 294. And yesterday when I looked at it, it was at 320 when I was talking about selling the put. So it already had like 30 bucks. You could have just closed it out and made 30 bucks. You'd be like, oh man, that's 30 bucks. But if you just do it every day, imagine just doing it every day. Every time the market bounce around, close it out 30, close it out 30, close it out 30. 30 times 20 days doing it in a regular trading month, because you got what, 5 trading days in a week, 4 weeks roughly, just estimating 20 days, 20 times 30, $600 just doing that. And that's just on one call. And if you're doing it and you got 2 calls on, you sell them out of money, you double that. It's just creating a little bit of income and doing it every day. Man, you can play around with this option chain. And Tesla is one of the best vehicles to do it because there's so much premium way out here in the tails. Like once you get outside of one standard deviation, which is what these dotted lines stand for in the option chain, this is one standard deviation. So you're out here. These are what you call 1 sigma moves, right? 2 sigma would be out here. You know, you can come out here and play around. And you're getting juicy premium out here. That's why I said the 15 delta. I was like, come out here around this area. And if we're just looking at it, this is a weekly chart. Well, you can see we right here in some little form of support, but the 160 put you way down here. That's not to say that it can't get there. That's just saying that the probabilities of it getting there are slim to none within the 45-day, within this time period. And so, guys, hopefully you I just wanted to come on and talk about that. Hopefully you got something out of this video. Let me know what you think. If you don't understand some stuff that I went over, let me know in the comment section. Um, Help me keep the channel growing, and I appreciate the subscribers that I've had recently. If you don't understand it, like I said, let me know. I only come on to do a video when I got something to talk about. I'm getting ready to go crush a workout. So with that, guys, I'm gonna be out. Peace.